recording going here. Welcome, welcome. I hope you guys had a wonderful New Year's. Um, it has been an interesting start of the year, my friends. I'm not going to go into too much detail, but for the first time ever, I have dealt with Grand Theft Auto. Um, and I'm not referring to the video game. My truck was actually stolen this morning, sometime early this morning, which was very exciting. And we did recover the truck about 15 miles away in not the nicest area of San Jose, but he or she had gone on a they were quite busy. I'll just say that when we got to the truck, there was a scooter in there, one of the birds. There was construction equipment that they use for zoning areas. There was a old gas tank, a at least 2 dozen water bottles, half opened, half still closed, and a beat to ship printer. So, needless to say, this guy was busy. He was on one. So did not get apprehended. Sadly, I would have loved to see justice because he put me through hell. But I will say that OnStar, which came as a added feature to our truck, which we just bought 2 weeks ago, brand new truck, still got a nice hefty loan on it, and came with OnStar, which I was not really a fan of at all. And wouldn't you know it, it is probably the sole reason that we were able to recover the truck, because of the location tracking device in it and its ability to shut the motor down remotely, which is super cool, because he parked the truck and then OnStar shut off the engine so that he couldn't restart it. And then probably within a short time later, he saw the police looking and took off. Anyways, it was a fun day. It was a fun day, but everyone's safe. No physical harm. So that's really important. And yeah, I'm really disappointed in San Jose, guys. I really am. It is not my favorite place. I will tell you that much. But we are safe and we're good, and we're going to move on. And now the beginning of the year will start kicking off. It's going to be a good year after today. So let's talk about some charts, some markets, some goodies. Yeah, thanks, David. It was it's just one thing after another, right? You know, I tell you, man, if it's not a terrible poison oak attack, it's the car's gone. You know, so what, you know, it teaches you to be resilient, I suppose. But yeah, let's talk about the markets. Let's talk about what's going on. It's a new year. We had a nice little sell-off today, which you know, I couldn't tell you any other reasons as to why that would be, because the market just seems to want to be up. But I've been saying it for a while that we are in this territory of just overboughtness. Now, I want to reiterate, I don't think the market is going to sell off. I'm simply going by what I see, you guys. And what I'm seeing is my indicators. And this is why these are so very important. Let's just take a couple of looks at here. I've circled it from one stance. 2019, right at the latter end of the year, the market was on tear. And it just did not seem like it was going to stop. It did not seem like it was going to stop. And here we are. You can see right here that price trades above our 30-day moving average, and we get 70 bars, okay, roughly 100 days, okay, without crossing below it, right? crossing below meaning closing below the moving average, right? So that's a pretty big chunk of time. But it went up 12%. We're not really so concerned about the percentage. It could have been 20%, more so the amount of time. The amount of time it spent trading above the 30-day moving average. So that's a long period of time, right? Well, from that point to the 200 moving average, which it will stay a lot further away from for longer periods of time, it was a total of 150 days or 99 bars, right? So that's a pretty big duration of time. But like I said, it can do that. However, when you see it staying above your 30-day moving average and your 50-day moving average without crossing below it, then you just get this big space, right? Now, this was an unforeseen circumstance. No one could have saw this coming. Well, I mean, so we think, but no one really knew this was going to happen to the extent that it did. So this is not to say that, hey, if it goes this long, you're going to get a massive sell-off. Absolutely not. Let's do this. Let's do this again. Back in 2017, Trump is starting his legacy. And 2017 was just an incredible year for stocks. If you weren't in long, you missed out big. Here we go. Did not touch the close below the 50-day moving average for the first run of 50 bars, or about 70 trading days. Then the second run, about 100 bars, right? Didn't do anything. But here's the important thing. This is what I'm talking about. You see no touching, no movement to the 200-day moving average from November 2016 all the way to February 2018, or 460 days, right? So that's a long duration of time. But do I think that it should have made that move during that time? I sure did. But the reason I didn't think that we were going to get too big of a sell-off was there's many reasons. The fundamentals were all there, his tax policies, all kinds of things. But another thing, just looking at the charts, all this movement right here, below the 50, above it, below the 30, above it, below the 50, above it, below, up, down, nice and smooth, right? You got your highs, your lows, your volleys, your troughs, your volleys, troughs. That looks nice and healthy, right? Well, here we are. There we go. Here we are, where we don't have any nice volleys and troughs for, what did I say, 100 days. And that's what happens. And let's do it again. We get about 90 days out of it without closing below the 30 or touching the 50. And then boom, that's what happens, right? So now let's go even further. Let's go to 2019, which I just showed you guys. That was about 100 days. Let's go to right now. Go. Okay. So right now, we've been extended for not a serious amount of time, though. Look, about 40 bars, 60 days. So that means that we still could have some time to go. However, when we have a big gap like this, that's a little concerning, because the bigger that distance is between our 200 moving average and current price, the more likely we're going to see some kind of retracement, some correction, right? You have a pretty big gap here in 2019, roughly 10%. Where are we now? Roughly 10%, right? So we did it again. We've done it again in the past. It just, history repeats itself when it comes to certain indicators, right? We just got to see we got to trade what we see. So another thing that I talked about in a recap video was retracements, or sorry, no, it was divergence. So I've been talking about this for quite a while, and I've talked about this in other classes. Here we go, talking about our divergence. We've got 3 divergences now, okay? So 3 different clearances of our 80 overbought zone, or the 80 area. So this line right here is our overbought zone, right? And typically all you really want to see is two meaning 2 consecutive hits above the overbought zone. Now, this is just an oscillator. This is a technical indicator. And this is the Stochastics 733. This is a standard tool that is used by many of the great traders out there, and it's proven time and time again. How we use it is we look for future potential price movements, right? So when we look for divergence, all we're looking for is, in simplest terms here, is we want to see a high and a lower high with price doing the exact opposite, right? A high and a higher high. That's what we want to see when it comes to a divergence. So here we go. We've got it right there. High and drag it over, lower high. And sometimes it's going to be tight. You can't even tell. So what you do is you just put your cursor right there. You look at the left side over here, keep the cursor there, and you can see in the blue, 95.86. Where is it here? 88.13, obviously lower, right? Whereas we look here from that high, we have a high of 32.86, and clearly stated here, we had a high of 37.25. Wait, did I say that wrong? I did. I said 37.08, 37.26. So obviously a high. So the paths have diverged from each other. Well, typically you only see it twice, which is enough for me to be cautious, and in some cases, maybe even trade it as a trading signal. But a lot of times just to be cautious. Now we have 3. Today was the 3rd. If this had gone the opposite way, it would have been completely different. I still would have been cautious. Now we have 3. Now we've got high, lower high, lower high, all in the overbought zone, which is important to note, because all these areas are in areas that the oscillator says, hey, according to our algorithms here, this is in a zone where price is maybe pushing the limit. So that's all we need to know about that. So we've got 1, 2, 3. So this sell-off right here could be the only day that it sells off, and tomorrow it could just continue its trend. Or we could see this actually make a little bit more of a correction. Okay, so it didn't quite break this little trend line right here. It almost did, but not quite. A close below it might indicate a little bit more of a sell-off. So let's keep an eye on that. The dollar index is just moving on down, guys. Just keeps on moving. I can easily see this pushing much further. I've been talking about this for a while. It's already getting close to these lows in 2018, right? Now, does anybody have any idea why dollar weakness is so prevalent right now? Did anybody hear any of the news that was discussed by the Fed? And if you don't know the answer, that is totally fine. But what was happened? Printing. Yes, printing. Right. In a way, that is what they're doing, right? The Fed made a pretty big deal announcement. I think it's a huge deal. You know, and a lot of my friends out there that are big time traders that have been doing this since Greenspan. If you can imagine that, Greenspan. They think the same thing as well. The Fed announced that they will put no attention on the table of consideration of a rate hike until 2023. That is a huge deal in terms of currencies. Why? Because rates indicate currency strength. If a currency is weak, or sorry, if rates stay low, and policymakers suggest that they're going to keep it low, keep it stifled down, it's going to make the currency weak. Versus other countries that are saying, well, we're going to try and keep our rate at 1%, 1.5%, 2%, things like that, right? That makes the currency stronger. So the Fed just basically announced, hey, we're going to push a weak dollar for the foreseeable future. So this has just got plenty of room to go down. I can foresee a little bit of a small move up. I doubt it'll come back to 92. I highly doubt it, but I can't see a small move up before it just continues down, because we have 2021, 2022, 2 full years that they said, yeah, not even on the table, won't even consider it. So what does that mean for us? It means a lot of our dollar related pairs are probably just going to keep pushing higher. The ones with the dollar on the opposite side, on the sell side, and the on the other pairs, the buy side. So let's take a look at our active positions. And if you guys have any stocks, would you please throw them in the chat right now so we can bring them up while we're talking about stocks before I move on to currencies. So let's bring up the first one. First one that we're in is Bed Bath & Beyond. And right now, everybody should have had the parameters were 1850 and 1750. I know a lot of people didn't get filled on that. So I adjusted it to 18 and 17. Did everybody here get filled at 18 and 17? That's kind of an important thing. If you got filled, excuse me, if you got filled with the a short of 18 and a buy of 17, everything is looking good. If you got filled on the 1850, 1750, everything's still looking good. But the important matter is if you got filled on short of 18 and buy of 17, we're going to be talking specifically about those ranges. So if you didn't get filled at that range, please let me know. So speaking of which, let's talk about it. Okay, so where are we? All right, so I want to bring this up because it is important. When and where and how much we got filled for. Okay, so right now, Bed Bath & Beyond. Okay, David, you got 1850 and 1750. So did I. Some people did not get that, so they got in at 18 and 17. Either way, all this is going to play its part. So I'm going to talk about people got filled at 18 and 17. Right now, price is right above 17, like by 3 cents, I think. What is it? Where's price at? Price is currently trading 1804. Okay, so right now we've got 4 days until expiration. Everybody should have bought the January 8th. So Friday, this expires on Friday. Close of day, it expires. You actually still have Friday to do trading on it. So close of day, this expires. And if price stays above 1850, $18, this expires worthless, and we walk away with a little bit of profit, right? So that would be the case if you got filled at 18 and 17. We're not going to do anything at the moment. If you got it filled at 1850 and 1750, which is where I got filled, let's talk about that. Whoops. Okay. So since we got filled, okay, so this is okay, I got filled at 1850 and 1750 on a different account. But anyways, we'll still talk about that. So if you got filled at 1850, you probably still got filled in around 90 cents on the long side and around $1.30-ish on the short side. So let's go ahead and pull up our trades here. Come on. Okay, yeah. So excuse me. Okay, so price currently is trading at, okay, so as you can see here, for those that got filled at the 18, we bought, our trade price was 89 cents, right? So that was how much we had to pay for our long side of our bull put spread. Okay, that's how much we had to pay. Well, currently right now it's at 88 cents. Okay, so technically it's down a penny, right? Now on the flip side here, we sold, right? This is the short side of our spread. We sold at 134. Okay, so we received a $1.34 per share or $1.34 per contract, right? So, and right now it's trading at 138. Okay, so right now price is just kind of hovering. Well, if you got filled at 1850 and 1750, we're below that, aren't we? We're below our short of 1850, right? So if let's go back to stock here. So if price, there we go. If price can't seem to hold this level and rally on up, if it expires below 1850, okay, we will get assigned, theoretically, not always, we will get assigned this stock, because what we'll do is we'll close our long leg. And the reason we want to close our long leg is because if we hold on to the whole thing, right now, if you got filled at 1850, you're in the hole a little bit, right? You're minus whatever it is on that specific contract, but you're also up on the long leg, and then you receive the premium. So we'd have to look at it specifically, but whatever the case is if it's below it, you're going to be losing on the short side and gaining on the long side. So what do we do there? Will we profit on our long leg? So if we were to profit on our long leg, let's just say hypothetically price drops below 18 to say $17, right? My long leg is probably going to be trading not at 88 cents, but more like $1.40, right? So think about this. I bought it for 89 cents and it drops down $1, and now it's trading at $1.40. So what does that mean for me? Simple math. I bought it for say 90. It's currently at 140, and I go ahead and close it out. I sell to close. Okay, I sell to close, and I make 50 cents, right? So the 50 cents I make there, I can apply it to my short leg. Is everybody with me on that so far? Now, this is a strategy we've been talking about for a little while, and the more we do it, the more you start to understand it. And I'm gonna try and explain as much as I can, as often as I can about it. But I just want to make sure. Very simple math on this one, right? You bought it for 90 and you sell it for 150, right? Or sorry, 140. Let's just say 140. With a profit of 50, right? You can apply that 50 to our short leg. So regardless of what's happening on our short leg, how much we're down, we can apply this profit to that, okay? And that's what we do. When this is trading above our short leg, or sorry, below our short leg, that's what we do. This is how we make more money on this trade than what we would have ended up making if it was trading above it, okay? So for David's instance, and anybody else who got 1850, this can be a very good thing, because what we're going to try and do is we're going to try and profit even more than what we set out to do. And what we set out to do was very simple. Let's go ahead and clear this annotation real quick. Okay, what we set out to do is very simple. We set out to say, hey, I want to sell at 18 bucks, this level right here, and I want to buy at 17 bucks, right? So sell at 18, buy at 17, right? When we buy our 17, this is buying a put. What is the purpose of that? We are looking for a price to go down. We sell at 18. What is the purpose of that? We are looking for price to do two things, be neutral or go up, right? So we want it to stay stagnant or up. This guy, we want this guy to go down, right? But the purpose of this is a spread. The whole strategy behind this is really to do two things, either go neutral and go up and make money on the premium we collected, which was we're getting there. We're getting there. Here we go. 45. Okay. So our premium we collected there was 45 per contract, $45, right? So that's how much we collected. The purpose of this is to see this continue to go up and make $45 with very low risk on this, right? Well, if it doesn't go that way, I can make more money and own the stock, which is one of the cases for anybody that got filled at 1850. So that's what we're going to do tomorrow. Anybody who got filled at 1850 is we are going to close our long leg. And I'm going to send this out so it's very, very simple. So if you were looking at your, if you're looking at your screen right now, you want to pull up your trade box, okay? And you're going to right click on the plus sign, okay? This is our long leg. You're going to right click it and you're going to hit closing order, right? We're going to sell to close. All right. So obviously I'm not going to do that on this one, but on the ones for the 1850, they got filled at 1750, right? Okay, so this would typically say, this would normally say 1750, right? That I believe is trading at about $1.10. Okay, so the bonus of that is if you did do that, you probably got filled at 90 cents, and it's currently trading at $1.10. So what does that mean? That means a gain of 20, which is great. So this is what we're going to do. At the open of market, we're going to see where it's trading at then. We're not quite sure, but we want to close out our long leg. And one more time, how I simply did that was I left clicked on the +1, our long leg, sell it. Here it comes up. The price will say whatever it says. Right now, it would say about $1. Right now, it would say $1.10. If you had the 1750, it would say $1.10. Okay. So you would want to just hit that, the limit, day, confirm, send, done, right? Well, wait till the market opens, because if you did it right now and the market opens and it says 120, which would be awesome, but you know, hard to say if it says $1. If you have it at 110 and you stick it to there and say confirm and send, it won't close out until it hits 110. So this is just directions on how we're going to get out of this. So we are going to close our long leg. This is how we do it. So I'm going to go ahead and delete this, and I will put in specific instructions in the chat tomorrow. But that is a visual guide of how we're going to do that. Then this is the process going forward. Price continues, let's just say hypothetically, price continues to go down, okay? Let's bring up our chart here. Let's say it can't hold this, okay? So if everybody got filled at 18, this would be the exact same process that we would do. So price can't hold this, it continues to trade down, no problem. We still have our short side of the spread, right? Well, by Friday, it will be expiring. By Friday, it'll be expiring and we will own the stock, okay? What will be our break even? What will be our break even? Does anybody know how to calculate break even on these? And if you do, that's wonderful. If you don't, I haven't talked about it, so you don't need to know the answer. Okay, so this is what we paid for our long credit, right? We paid 89 per contract, 89 bucks, right? That's how much we paid. On our short side, we made $1.34, okay? And the difference is 45 cents, right? So that's the credit received. So what does that mean? It means that if we close this long leg right here, we're left with this. Well, I said that we were going to close it. I said that we were going to close it if it does at $1.10, which we received 20 cents, right? So what will we do? We would take 134 plus 20 because we made 20 cents, right? We bought it for 90, we sold it for 110, 20 cents, right? Very simple. So now we're at $1.54. What does that mean? How do we apply 154? Well, very simply, if price is below $18, we're going to get assigned 100 shares at 18. And how we calculate what our break even is we take 154 minus 18. No, that's not what I want to do. If I go like that, I don't know. Okay. But simply put here, we're going to take 18 minus 1.54. Okay. So here it is right here. 1646 is our break even. So the bright side of that is that means that price, what was it again? 1646. That means price could go all the way down to here and we're still making money. Okay. And if you did that, if you did 1850 was your break even, then you do it the exact same way. 1850 minus 154 or whatever it was. Okay, so then your break even would be all the way down here, right? So that's the bright side of this. We get assigned anywhere up here. We have all this room to play. So price can come down here, go even below it. Doesn't matter. The important thing is that even though I got assigned at 18 bucks or 1850, my actual, in theoretically, my actual price, my fill price, if you want to look at it this way, is $16.96. A penny above that, I'm making money. Okay, so that's the beauty of this system is you can profit on this staying above our spread. You can profit on it staying below our spread. You can profit on it doing anything it wants to do. That's why we like these, right? So as it stands right now, an 1850 fill, we're going to get assigned. We're not going to hold on to this because we're going to end up losing money. We wouldn't want to do that. We are going to get assigned by closing the long leg, which I talked about, and I will put in the specific details in the chat. Anybody who got filled at the 1817, we are not doing anything until price unfolds, because at its current point, this at 1803, it would expire worthless, wouldn't it? Because if our strike price is 18, even 1 penny above it expires worthless. We walk away with max profit. Okay. Now here's an important, very, very important piece. All of what I said is based off of one contract. So if you did multiple contracts, you have to keep in mind that whatever you decide to hold on to, you will get assigned, right? So anytime I'm talking about this, I never really want to own more than 100 shares ever. So that means that if you let's just say hypothetically, you did 2 contracts, that means you would close 2 legs on the long side, right? Let's pull this up. Okay. If this said +2 -2, that means you would close both of these legs and one of these legs. Okay. So you would close both of these and one of these. So that way we're only left holding 1 contract. That means we get assigned 100 shares. I don't really want to get assigned 200, 300, 400, 1,000 shares on any stock. Okay. So just keep that in mind. If you did 2 contracts, 5 contracts, 10 contracts, you would close all 10 legs. And if it was 10 contracts, you'd close all 10 legs here and you would close 9 legs here. okay? And then we'd figure out what the profit and losses were after that. But everything would still be as I just said, where the profits, the gains are, right? Does anybody have any questions about that? Does this make, is this not making sense? That's a better question. I was going to say, is this making sense, guys? Is this not making sense? This is part of our education side of the session. So I want to make sure that you guys really get this. We're going to continue to go over this until you guys have this down like it's brushing your teeth. Okay? Squeaky clean. With a peppermint finish. Okay. I'm gonna take your silence as yes, I think I got it. If you didn't want to say you don't have it, direct message me because I want to make sure you got it. And again, like I said, we're going to just continue to learn this, but we have live trades going on right now, and there are some moves that we have to make. So just follow my lead and do as I tell you to do, and everything will work out great. We're going to make money. So that's the most important thing, right? So let's move on to American Airlines. Okay. What was the okay. All right. So we sold the 1650 and we bought the 1550. Okay, we made 46 bucks on that one. Okay, so right now our break-even price is way, or sorry, not break-even. Our short side is way up here, right? So we have on this one the exact same 4 days. So I can tell you right now, guys, unless American Airlines says we have a cure to Corona and everybody gets a free ticket, this stock is probably not doing anything. So, or not, at least not getting back up to 1650, right? That'd be a huge jump. What would that be? Just out of curiosity. Yeah, that's not happening. So we're going to take assignment on this one, and we're going to do it the exact same way I just said. Okay. Now this one's a little bit interesting. This is the fun thing about options. The short side of this option is way below our strike price, right? But this is not very far off in our actual trade price here, right? Our trade price says it was $1.16. Now it's trading at $1.45. Not that much, right? Here's the other interesting thing. The long side, which this should be a lot better, is a penny off. So fortunately, unfortunately for us, it means that we're probably not going to make any money on this, which that's fine. That's not ever a goal. It's just a plus, a bonus, because if this was trading at, let's say a buck right now, and it was easy math, 70 cents, we're going to make 30 bucks right on that we can add to this, but it's not, and that's fine. So what we're going to do is same thing. We're going to close our long leg right here, and we're going to keep our short so we can get a sign. Now, all this means, guys, is that you are now going to own 100 shares of American Airlines and Bed Bath & Beyond. Every time I do these sessions, I account for individuals that have over 100,000 and individuals that have 10,000 or less. Everyone in here is coming with different trading sizes, brokerage sizes, account sizes to trade with. But every time I do these sessions, I'm accounting for someone who can't really do 100,000 and above. Okay, so that means that you have to be cautious because at 1650, that's going to be $1,650. At 18, that's $1,800, right? So you get the idea. That's going to be a fairly large chunk if you're trading with $10,000, right? So that's a very large chunk of your account. You need to be careful because if you're already, let's say, at 8,000 with $2,000 left, you might get a margin call or something like that. So just be cautious. if there's any concern with that, definitely message me, call me. I want to make sure that you get that figured out. But I just wanted to put that disclaimer out there. Be cautious of your trading account sizes. Okay, so same exact process on this one. We are going to close our long leg and keep our short leg open. If you have multiple contracts, you do the same thing. When are we going to close it? Well, probably, I don't know, tomorrow or Wednesday. I honestly don't know yet because we have time. We have time to let this mess around. And time is good because maybe we'll get paid a little more, right? That'd be kind of nice to make a little more money. But if it doesn't, we're definitely closing this before expiration because we don't want to take a loss on this. We're definitely closing this. And how that would look is this would just be a flat break even there, right? And you would still make, how much do we make on this? $46. Okay, so we'll be able to apply that to our net profit on this one. And so how this is going to work is that this will get closed. So now we will have $1.16, okay, or whatever this is trading at when we close it. Okay, so what does that mean for this? Same math scenario. Okay, if we have 116 and we get assigned at 1650, our break even, that's not how it's going to work. Our break even is going to be 1534. Okay, so that's how it stands at this current moment. Obviously, things will change when we readjust things. So our break even is going to be there, and here's the bonus side. We're going to own it at 1650. Our break even is going to be a little bit up here, so we're going to be just a tiny bit down. Then what we're going to do is we're going to look into selling some calls on it because now we'll own 100 shares of American Airlines. The same thing goes with Bed Bath & Beyond. This one looks a little bit better for selling calls. But anyways, then we're going to turn around and we're going to sell a call on it. So depending on what that would be, let's just look hypothetically. We're not going to look at this until this is all closed and exercised and all that stuff. But let's say it is. Let's look at least 20 days out, which by Monday, that will be 20 days out. And we go ahead and sell a single. Oh, that's Bed Bath & Beyond. Okay. So let's just say I want to keep price. I think price will stay below 16 and below. I'm going to make 80 bucks right there. So then we can apply that to this 1534. So 1534 plus 0.80. So now our break even is 1650. Wait, I did that wrong. Sorry, let me do that again. Hello. 1534 minus 80. Oh my gosh. 1534 minus 80. There we go. Now our break even is 1450 down here. Okay. Well, we are bullish on American Airlines. So whether it keeps going down, it doesn't really matter. But the bright side is my break even just keeps getting a little bit lower. And if price were to rally, great. We own shares, so we're gonna make money on that. And if it doesn't, then we keep the premium. Lots of different strategies, but the point is that we're going to end up owning this. Our break-even price will be pretty decent. When we sell a call on it, it'd be even better. And if price can hold here and start to make a little bit of movement, we're really going to bank in on this one. So I'm pretty excited about both of our trades. Does anybody have any questions on them? And while you are potentially thinking of questions, let's move straight over to our CAD Swiss franc trade, which is doing a whole heap of nothing. Okay, so if you guys think of any questions with those trades, just let me know. Again, Bed Bath & Beyond, anybody who got filled at the 1850, 1750 spread, there will be specific instructions in the chat. Make sure the market opens at 6:30 tomorrow morning. I would be up, and I would be looking for that exit as close to 110 as possible. I'll have all that in there. But this one, guys, make sure you're up early for that one. And that's not how early you normally get up. Well, that is the beauty of trading, right? And then you can just go back to sleep. But that is the plan, the game plan for that. This trade, CAD Swiss franc, it was looking really good. I was pretty excited right here. I thought we were finally getting our breakout, and then it started moving up, and I was like, oh, here we go. And here we are back in this flat area. So it's still doing a whole lot of nothing, which I mentioned is a possibility of just trade or flatlining and doing nothing. This is a slow mover. We're kind of expecting that. So we're not doing anything on this one. We're just holding on, sticking tight. Let's go on to those dollar pairs that I had mentioned. FX majors. Euro Chef, that was a trade that I was looking at. It came back down into this zone. I didn't want to, it would have been a really nice trade had we have bought the breakout of this. But this is a longer term trade, so I would not have done that. But it would have been a nice one. So short term, like I said, this particular trade, we're looking for this guy to break above these areas right here. This resistance level, it's kind of, it's lost its importance level. It's lost it's not as important as it used to be. Anytime I see a resistance level that kind of just keeps getting beat up and down through, it's really not that significant anymore. It's not significant, but it's just not as. So you can see that the wicks here touched it and then got stuck there. So I still like it, right? But we really need price to break above all this stuff to start moving. So what does that mean? Well, there's two options. One, we could buy the bounce off of this, which could be a good move, or we wait to see for it to break out either direction. Okay. So there's this strategy, or there's this strategy to this strategy. So the latter of the two is kind of what I'd like to see happen. Or the latter two is what I would move on. I should say. I'd like to see price. Let's go ahead and get rid of this. I'd like to see price come back down to this area to get long, as opposed to buying right here. The bright side of this is if you did buy right here, you'd have a very short stop. So meaning your risk would be low. You would trade smaller. You could trade, you could trade a few lots on this, risk maybe 20, 30 pips. If it doesn't work out, no biggie, right? But that would be pretty short term, guys. And this is a long-term trade. So that's not really my stance on this. But I just want to let you know how many options we have here. You could buy right here with a very low risk profile. Low risk profiles, I love them to death. So meaning if you were to buy just right around this area, it's currently trading at 07, just 08, I would put a stop down here. So you can see that's 25, 30 pips. If it were to break below that, I would only assume that it's kind of going to try and make its way down and then make its way up, right? So two options: buy the bounce, or wait for the break and buy the bounce off support here. So short-term bounce, long-term bounce. Okay. So for me, I'm going to just wait. I'm going to wait on that one. But let's look at all of the dollar pairs really quickly. I talked about the dollar. I said that it's long-term. It's got lots of room to go down. Short-term, I think it's a little overextended in terms of being oversold. So this is my trend line. These trend lines are my friends right now. I've got them all over the place. Well, almost all over the place. The New Zealand dollar is a little different, but you can see I got them all over the place, right? If price can't, oh, come on. If price, there we go. If price can't hold these levels right here, I see it coming back down to here. So what does that mean for us? Well, if I were to bring this down to say a 4-hour time frame, which is still long term, you know, it's not too short. We're not far away from this right now. Okay. So what I mean by that, if price kind of continues to go here, put an alert right here, you guys. Let's just do it right now. They're free. You can put as many as you want on. You can have hundreds of alerts. I usually do. So I've got my alert right here. If price makes its way back down and hits my alert, I'm going to be on the lookout to sell this. Okay. So this may or may not be a live order. The reason it may not is because this could happen overnight. This, you know, could happen at odd end hours, and at times when God knows that everyone should be asleep and I'm not. I know we've got we've got some night owls in here, so this could be your moment to shine and make some serious bucks, because this stuff typically happens overnight. The Australian dollar session or the Asian session, all those currencies, they go bananas in the late evening Pacific time, wee hours in the morning, you know, 1, 2, 3 o'clock in the morning. That's typically when you can see big movements. So keep your eye out on this. I don't want to go long. Yeah, it would have been a nice, easy trade. I mean, it's trending up, but like I said, I want to see a little bit of a correction. So I am counter trend at the moment, long term bullish, short term bearish. Okay, so I'm looking for this and this right here to break. Look at the difference on the euro dollar though. It is close. Okay. Put an alert there. Make sure you guys add these alerts, add your phone, or sorry, add the what is this? TradingView app onto your phone. It'll that way it alerts you when the alert gets triggered. So it'll pop up on your phone. That, you guys, is crucial when trying to take advantage of these shorter term opportunities. Okay. So we got euro dollar, Aussie dollar, some of the yen pairs. Some of the yen pairs, they don't look as promising. Long term, they look great. The Australian yen, I'm still long term. I'm bullish on it, but I think if any of these correct a little, so will this, right? So if I'm not bullish, or if I'm not ready to go bullish on those, I'm not ready to go bullish on this one. But overall, you guys, we're ready to jump in on these. Now, here's the thing about Forex, which I promised you guys I would create some videos for you, and I'm still working on that now that my health is much better. Here's the thing about Forex. If you go long on the euro dollar, the Aussie dollar, the euro yen, the Aussie yen, et cetera, et cetera, et cetera, what you're doing is you're exposing yourself to being you're exposing yourself to a lot of risk, because you're basically all in the same bucket, right? So if you buy Apple, Google, Amazon, if you buy any of the FANGs and you buy 100 shares of all of them all at the same time, well, what happens if there's a dip? Does just one of them get correct, or do all of them correct? All of them do, right? Well, it's the same thing here. If the dollar corrects and takes back a little of that lost, a little bit of that. Here, I'll bring it up. If the dollar corrects and comes up this way, recovers a little bit of that lost ground, right? All the pairs that I just mentioned, every single last one of them, they're all gonna go down. Every last one of them. So we want to pick the ones that look like they have the best kind of setup. And right now, I think the euro dollar has got a pretty decent setup. I think the Aussie dollar's got the best setup for me. in terms of a short sell-off. I think that one has the best looking setup. Then there's other pairs. The yen pairs, we'll keep our eye on them. But all the other Aussie pairs, this one has a pretty decent setup. It's just been going gangbusters up. Same thing here. So keep your eye out on euro dollar, Aussie dollar. Okay, so put your alerts there, and if these things go off in the night, be prepared to try and take advantage of that, because if they do sell, they can have big breaks, like this right here, right? And we talked about this. When this sold off, it broke that trend line. It was just going up and up and up and up, and boom, right? Here we go again, up and up and up and up, right? And when it breaks, it could go down easily 100 pips, easily. So at the shortest term, if let's just say 76.15 was your entry, right? Let's just say price comes down and then breaks it here. So let's just say 76.20, 76.10, whatever, right? I would target minimum down to 75, minimum. That's 100 pips. I would easily target that. And the bright side of that is your stop, you can put it short, because if this isn't the break, right, this could just keep going on. The beauty of this is it's a low risk profile, meaning if it breaks this but does a fake out like this guy right here, that was a nice little fake out. If it breaks it, I'm going to have my stop somewhere around here. I'm not going to give it too much room. Does that make sense to you guys? I don't want to give this too much room. I don't want to say, well, I'll put my stop up here to make sure it has plenty of room to make up its mind about this break. No, not really, because it's in this pretty solid bullish trend right now. Realistically, if you wanted to be long this pair, you should have been long this pair down here, right? So realistically, it's in a nice uptrend. So if it breaks here, I'm going to have my stop short, maybe 30, 50 pips max, right? No more than that, because if it comes right back up, it could just keep trending on up. Okay, but be on the lookout. I'm definitely going to be looking to short this on the short term down to here, maybe in the long term to there, and then we look to go long this bad boy, because we are short the dollar long term, right, for the foreseeable future. Whew. Okay. I don't have really anything else on my agenda. Oh, I did mention Amazon. This is textbook setup, you guys. These kind of patterns right here, textbook. Okay, it's beautiful. On the targeting of this, you would take that low to that high, right? That's about a 20% move, or roughly $500, right? I typically don't always go with the exact length of that. I'll typically go a little bit shorter, maybe to here. So that's roughly about 400, 420. So our first target would have been right about here, right around there. Okay. I typically take my targets and I cut them in half. So if I have 10 shares, I'll dump off half of my position and hold on to the rest. I'll take some profit off the table. Okay. This one would have been good if you did get long on the breakout. So around this price, I mentioned that this would not be a stock that you could really do any options on. Why? Because if you traded this, let's just pretend that we bought the January 29th. If you traded this, a single option, you'd be down would have cost you 13 grand. So simple way to look at this. If you bought at 32.60, and you're down, let's say, what is the math on that? So you bought 32.60. Let's just say that was the area right around that breakout. Nice little area. You're down $70 per share, right? So in your option, you're down math. Okay. In your option, if you had done an option trade on this, your option is almost cut in half. Down to here, you're toast, right? I mean, you're not toast until it expires, obviously, but this goes against you. You're down here, yeah. Your trade's on fire. The the beauty of trading an option is you could say, hey, you can buy 4 shares for $1,200, or I can buy, or whatever it is, yeah, roughly $1,200, or I can buy 100 shares, control 100 shares for, sorry, not 1,200, 12,000. There we go, big number, right? You can buy 4 shares for 12,000. I can control 100 shares for 13,000. Well, my friends, this owning the shares in this circumstance, much more forgiving, because yes, it's a picture perfect pattern here, but unless you're trading with hundreds of thousands of dollars, your trade is on fire and you're about to lose 13 grand. I don't feel good about that stuff. Okay, I don't care if I'm trading $10 million. I still don't feel good about that stuff. If you're trading $10 million, you should not have you shouldn't have more than 20% into your options account. Everything should be in a nice mixed portfolio. But the point is that just buying the stock, we have a lot of things we can work with here. If you had bought the option, you have to be right. You're wrong right now, and your trade's on fire. You're about to lose 13 grand if it continues to fall. You buy the stock, you can hold on to it, see how it works out. You can really play it out. If this just sputters and starts to do this stuff, well, the 29th is right there. So you only have this much time for it to come back up. Well, that's tough, right? When we own the shares, we can let it work itself out for as long as we need to. That's not to say that you shouldn't have a stop in mind. If this were to break the support level here, and when I say break, I mean start to trend below it, I might look to get out the trade. Yeah, you take a small loss. That's just trading. That's just how it is, because maybe this is preparing itself for a longer dip. But if you love the stock and you don't mind controlling you don't mind about $10,000 of your margin being preoccupied by Amazon, hold on to it. It's Amazon. It's going to continue to go eventually, right? Okay, that's all I had to say on that. This is a picture perfect trade setup right here. It's not going great at the moment, but there's plenty of opportunities for this to turn around if you didn't buy an option on it. Okay, any questions for me, guys? Anything that you were looking at before I sign off here? I did talk about a ton as per usual, right? But we reviewed our stocks. We're gonna make some action on Bed Bath & Beyond tomorrow, and we're gonna make some action on American Airlines. I don't know, tomorrow or Wednesday, one of the two, or even Thursday. We have till Friday, so that's the beauty. So we've got some setups on some currency pairs. We've got some things to look at. If you guys have any stocks that you're looking at, please send them my way. I've got some things on my horizon that I'm looking at. So lots of fun, exciting things on the up and coming. What was that one I was looking at? It was Alaskan Airlines. What is it? Oh, that's right, ALK. I actually really like this stock. The reason we didn't trade it before is it's just not. It was, for one thing, it's kind of expensive. American Airlines is significantly cheaper, so easier to work with. But I kind of like this stock. I want to see what happens at this area right here, $49. If it can't hold it, we will be looking to do another spread on it, maybe around $45. We'll have to wait and see. But I kind of like this long term. I wouldn't mind having a little Alaskan. I actually love Alaskan Airlines. They have amazing deals, sometimes better than Southwest. Southwest is another one that we've been talking about trading. It just kind of, it just it doesn't look as promising as some of the other ones. So that's why we haven't looked at it. Could be good. We'll see. But okay, if you guys don't have anything for me, I'm going to sign off here. I'm going to stop the recording.